Without objection, the chair is authorized to declare a recess of the committee at any time, and all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is entitled Evaluating the Effectiveness of International Financial Institutions. I now recognize myself for 5 minutes to give an opening statement. Today we welcome the testimony of Mr. David Malpass, Undersecretary of the Treasury for International Affairs. We welcome you back to the committee. This is the Undersecretary's second appearance before the committee since his confirmation last summer. We've enjoyed working with him and his staff and look forward to hearing his views on the international financial institutions, or IFIs, and other matters under his jurisdiction. The IFIs include the International Monetary Fund, the World Bank, the regional development banks. For some time now, the committee has been concerned that these institutions are not doing as much as they can to focus on results. The World Bank is a case in point. Despite its mission to end extreme poverty, the bank's organizational incentives are still geared towards pushing money out the door. Consider this. If a promising young staff member were to start their career today at the World Bank, how would they realistically get ahead in the institution? Probably not by demonstrating success in the poorest countries year after year, or by generating new knowledge when projects fail to deliver, but instead by getting large loans to the board for approval, including for middle-income countries that already have access to capital. Even in those cases where poverty does decline, the bank may take credit for improvements when its contributions are in fact unclear. As the World Bank's Evaluation Office has shown, the bank is often unable to establish how its interventions have made an impact on the ground. But if bank staff are not primarily compensated and promoted for achieving results, it should surprise no one that linking projects to economic growth is less of a priority than cultivating new buzzwords, jargon, and development fads to justify future lending. As the United States considers whether to take part in a capital increase for the bank, I hope the administration will communicate that Congress is growing impatient with the World Bank's lack of focus and its operational deficiencies. There are good people working at the bank who care deeply about helping the poor, but as staff surveys have shown, they themselves have doubts about how the bank rewards and enables high-quality work. It's heartening to hear that the Treasury Department believes these matters are worth taking seriously. Turning to the IMF, the committee continues to support a back-to-basics approach for the fund after several years of adventurism in Europe, especially the ill-fated bailout of Greece. While we were pleased to see the fund end its participation in the Greek program earlier this year, the IMF has now embarked on a new record-breaking program in Argentina, committing $57 billion to a country that has defaulted on its external debt no less than 8 times in its history, and which has gone to the IMF more than 20 times in the past. While the U.S. remains supportive of the current Argentinian government, history will repeat itself if the country's policies strangle the economy further. A tax on exports, for instance, remains puzzling at a time when Argentina needs growth and foreign exchange. We should also apply lessons from the IMF's experience in Greece to ensure that Argentina's debt burden is manageable. Beyond Argentina, the committee continues to question how the Treasury Department intends to hold the IMF accountable for providing assistance to countries like Angola, which have outstanding obligations to U.S. companies, and how the United States intends to use its influence at the IMF to advocate for U.S. interests. The committee is also interested in just how temporary and catalytic the IMF's assistance has become in certain countries. Both in its founding documents and subsequent publications, the fund has billed its programs as short-term interventions to save its members from crisis. Indeed, IMF loans should be a rare dose of antibiotics carefully administered, but at times they can resemble chronic pain management. Pakistan, for example, which is currently in bailout talks with the fund, has had no fewer than 21 programs since joining the IMF in 1950. It's important for us to break these cycles of dependency. This brings us to funding. The IMF in recent years has benefited from a number of financing sources, including the new arrangements to borrow and bilateral loans, which are not deployed but remain available just in case. I look forward to hearing how the administration views this just-in-case money at a time when the IMF's quota is double what it was 4 years ago and when forward commitment capacity stands at $250 billion. We also look to exploring how the administration sees the IMF and the other IFIs operating in a changing landscape with new multilateral organizations, including the European Stability Mechanism, the Asian Infrastructure Investment Bank, and others. We need clear guidelines governing cooperation, and that cooperation must not undermine the IFI's commitment to rigor and results. Again, I thank the Undersecretary for appearing before us today, and I am confident he shares our belief that international financial institutions' accountability for results is a top priority. Now, the Chair recognizes the ranking member of the subcommittee, the gentlelady from Wisconsin, Gwen Moore, for 5 minutes for an opening statement.
And thank you so much, Mr. Chairman, and I do welcome our witness this morning. We're ending the 115th sort of the way we began here, really talking about the importance of the United States positioning itself in the world through these international funds. I am really eager to hear your testimony and compare it with your written statement about our being the largest financial contributor, having that important voting voice, and wanting to hear you further embellish on the importance of continuing to have that voting propriety. I am very interested in hearing about China's World Bank and its voting power remaining well below the share of its global economy, and and really talking about the importance or lack thereof of that development. Mr. Chairman, I want to yield the balance of my time to our ranking member, soon to be chairman of the full committee, Ms. Waters.
Thank you very much. I'd like to thank Undersecretary Malpass for coming before our committee again to discuss the role of the United States in ensuring the effectiveness of the international financial institutions. This committee has a long history of supporting the important work of the World Bank and the regional development banks. We've also been strong advocates over the years of reforms that were not only important to furthering the mission of the development banks, but also critical in helping to ensure broad congressional support for these institutions. We've also in the past worked in a bipartisan fashion to support the IMF in times of crisis. At the same time that we pressed the fund to pay more attention to the social dimension that must be present when decisions about economic assistance are made. Although there have been periods, of course, more recently, where the spirit of cooperation on issues related to global economic governance has much less in evidence, I feel optimistic. I look forward to working with you next Congress to ensure that accountability and effectiveness at the international financial institutions remain strong, that broad public debate about IMF's and the multilaterals development banks policies remain active, and that the international interests of poverty, alleviation, growth, and economic stability continue to be advanced. So I thank you very much, and I yield back.
Gentlelady yields back. Today we welcome the testimony of Undersecretary for International Affairs at the U.S. Department of Treasury, David Malpass. Undersecretary Malpass oversees policies in the areas of international finance, trade and financial services, investment, economic development, and international debt policy. He also coordinates financial market policy with the Group of 7 industrialized countries. He previously served as Deputy Assistant Secretary of the Treasury under President Ronald Reagan, Deputy Assistant Secretary of State under President George H.W. Bush, and Chief Economist at Bear Stearns. In addition to his Treasury and State Department positions, Malpass served as Senior Analyst for Taxes and Trade at the Senate Budget Committee and Republican Staff Director of the United States Congress's Joint Economic Committee. He holds a bachelor's degree in physics from Colorado College, an MBA from the University of Denver, and studied international economics at Georgetown University School of Foreign Service. Without objection, Undersecretary Malpass's written statement would be made part of the record. Undersecretary, you are now recognized for 5 minutes.
Can you, that mic?
Mike. Thank you.
Thank you very much, Chairman Barr. And Ms. Moore, thank you for holding this hearing. And I enjoyed seeing Chairman Henserling and Mr. Hill on my way in. And it's very nice to have heard from Mrs. Waters as well. My testimony a year ago to this committee addressed the topic of achieving faster U.S. and global growth in ways that improve after-tax wages for American workers. While there has been substantial progress in the United States, growth abroad has softened materially, causing challenges for international economic policy. In this context, I would like to provide an update on some of the major policies we implemented over the last year and describe our policy direction in 2019. In 2018, we worked to increase the growth orientation and accountability of the G20, G7, IMF, and multilateral development banks, which I'll call MDBs for the rest of the presentation. Secretary Mnuchin has pushed forward an initiative on debt transparency that will, in the near term, significantly increase public disclosure and broaden the existing definition of international debt beyond traditional bonds and loans. This will help push back on China's overlending to fragile developing nations, including those with weak governance. We engaged repeatedly with China on our trade and investment concerns and the problems caused by their One Belt, One Road initiative, which often leaves countries with excessive debt and poor quality projects. We have built a common awareness of these concerns in the G7 and G20. In lending, China often fails to adhere to international standards in areas such as anti-corruption, export credits, and finding coordinated and sustainable solutions to payment difficulties, such as those sought in the Paris Club. With Congress's bipartisan support, we have enhanced America's national security through the enactment and ongoing implementation of FIRMA, which has strengthened and modernized the Committee on Foreign Investment in the United States. We have worked multilaterally to forge a new currency consensus in the G20, including the latest G20 communique, which recognizes the growth and investment benefits of currency stability. The administration recently concluded the USMCA, U.S.-Mexico-Canada agreement, which included the first currency chapter in a trade agreement. We also reached an understanding with South Korea on currency stability and transparency at the time of the update of the U.S.-Korea Free Trade Agreement. Argentina's new IMF program, which the chairman mentioned, includes a nominal monetary anchor and an important commitment to leaving currency intervention unsterilized. Those are policies that quickly stopped Argentina's mid-2018 currency crisis. By expressly limiting the growth of the monetary base, a policy that the United States strongly supported, the central bank was able to arrest the precipitous decline in the exchange rate, and the authorities there are on track to reduce interest rates and inflation very significantly, supporting growth. At the G20 summit, just concluded, President Trump promoted economic prosperity in the Western Hemisphere through the America Crece initiative. That's the Americas Grow initiative. One key element of this initiative is to deepen U.S. commercial ties with Latin America in energy and infrastructure. In 2018, the United States signed energy framework arrangements with Panama, Chile, Jamaica, and most recently, Argentina during the G20 summit. Looking forward, we are working with Colombia and have identified other attractive partners. We have refocused the Financial Stability Board on its systemic risk mandate. I served on the Nominations Committee for FSB leadership and was pleased with the recent announcement of Federal Reserve Vice Chair Randy Quarles as the FSB's next chairman, the first American to serve in this role. My testimony before Congress last year discussed the role of the multilateral development finance in global growth and prosperity. Since then, the World Bank has committed to meaningful reforms to focus lending on countries in need, enforce its graduation policy, implement differential pricing, and agree to other reforms that would enhance accountability. As discussed further in my testimony, a 2018 package for a World Bank capital increase focuses on these areas and includes a new financial discipline mechanism that constrains annual lending levels by the World Bank to stop the pattern of recurrent capital increases. Looking into 2019, we are again aiming our initiatives at improving U.S. and global growth. As a key part of this effort, we maintain active economic and financial dialogues with countries around the world in order to exchange views on and assess systemic vulnerabilities and to support democratic principles and institutions. Here in the Western Hemisphere, we will be building relationships with the newly elected governments, including in Brazil and Mexico, and deepening the America Crece initiative. We have emphasized the risks and challenges posed by the troika of tyranny, namely Venezuela, Cuba, and Nicaragua. This troika has actively subverted democratic institutions, looted its people's assets, and engaged in economic malfeasance. In one portion of the crisis, nearly 50,000 Venezuelans per day are crossing into Colombia. Secretary Mnuchin has held 4 meetings of finance ministers to review the crisis in Venezuela and the impact on its neighbors and support the broad coalition pressing for democratic change. In Nicaragua, we have built a strong consensus of donor countries to stop the multilateral development banks from lending to the Ortega regime. A high priority in 2019 will be the continued implementation of FIRMA. Pursuant to that legislation, CFIUS launched an innovative pilot program on November 10th, which includes requiring declarations for certain foreign investments in U.S. businesses involved in critical technologies in 27 specific industries. There will be substantial work to deepen our major initiative on debt transparency, and we will continue to challenge China's unfair trade practices and lack of reciprocity in trade, lending, and investment. We will continue our work in the G7, G20, and other forums to build the common understanding of the challenge to our market system from China's non-market policies. As Brexit approaches, Treasury is analyzing risks to the international financial system and working with the EU and the UK to ensure continued market access for U.S. firms, including financial services firms, and to avoid cliff-edge risks. We are working toward an improved trade arrangement with the EU and would like to pursue a bilateral trade agreement with the UK. We continue to work to streamline the G20 and make it more effective. In 2019, Japan will chair the G20, while France will chair the G7. We will also be preparing for the United States to host the G7 in 2020. Through Treasury seats on the boards of the Millennium Challenge Corporation, OPIC, and the new organization to be established under the BUILD Act, Treasury seeks policies that provide strong financial coherence, further the national interest, and promote the effective use of taxpayer resources. Treasury is also leading U.S. efforts in the International Working Group on Export Credits and working with the interagency on reforms in connection with the Ex-Im Bank to pursue relevant reforms. The IMF has requested a buildup in its quota resources and claims that it needs to be the center of the global financial safety net. We will be seeking a constructive size for IMF resources that contributes fully to the stability of the international financial system, but recognizes that the IMF is just one part of the global financial system and its various support mechanisms. We are opposed to changes in quotas, given that the IMF has ample resources to achieve its mission. Countries have considerable alternative resources to draw upon in the event of a crisis, and the post-crisis financial reforms have helped strengthen the overall resiliency of the international financial system. We've stepped up our engagement in shaping IMF program design. We prefer programs with design elements that prioritize the potential for broad-based growth and allow countries to pivot away from policies that haven't worked. This involves 3 major changes to the IMF's current approach. First, fiscal policy changes need to be growth-oriented. Second, IMF programs have often measured the success of privatization in terms of the projected proceeds for the government, which often means continued monopoly power. Demonopolization of critical sectors generally has a more lasting growth impact. And third, monetary policies that provide sound money are at the core of a successful growth program. In conclusion, Mr. Chairman, while U.S. growth has accelerated, growth in many other countries has slowed. This gives rise to new challenges in international economic policy that we are working to meet through new initiatives. I appreciate the opportunity to present this committee with a description of our major initiatives in 2018 and policy direction in 2019 and beyond, and I invite your views and questions. Thank you, sir.
Thank you, Secretary. The chair now recognizes himself for 5 minutes for questioning, and I did allow you to go on a little bit longer because you've got such a robust agenda over there at Treasury.
Thank you.
I want to focus my 5 minutes of questioning on the MDBs, and specifically, let me ask about the World Bank. As you know, this committee has spent a good bit of time in the past Congress in oversight of the World Bank, and we have found through our various oversight hearings that the bank falls short in many respects in its anti-poverty mission. We have found, for example, institutional incentives that prioritize generating high loan volume as opposed to delivering results and managing projects capably. We have found lending to corrupt regimes that abuse their citizens and trample on economic freedom for the poor. For example, appearing before this committee, March of 2017, Sasha Shavkin of the International Consortium of Investigative Journalists testified that the bank repeatedly funded governments that not only failed to adequately resettle communities, but in some cases were accused of human rights abuses such as rape, murder, and violent evictions associated with bank projects, and then insufficient attention paid to auditing bank initiatives for corruption. So with those findings in mind, and with your testimony here today that Treasury has been successful in getting the World Bank to commit to meaningful reforms, can you tell us how you have been able to succeed in getting the World Bank to address those very serious problems and shortcomings?
Thank you. I'll endeavor. Thank you, Mr. Chairman. World Bank issues are complicated, as you know, and so there are mistakes made, and so we try to look at the overall picture of an organization that is trying to promote development. With regard to the reforms that we looked for over the last year as the World Bank was considering its step up, some of those were to get it to look for a sustainable lending limit. So one of the challenges for previous World Bank capital increases and cycles was without a limit on the lending, then the lending went into projects that we wouldn't have thought were the highest priority projects from a development standpoint. To your point, as far as mistakes, you know, the loans that the World Bank makes are reviewed, and they try to address resettlement issues, human rights issues, and corruption issues. So I can't guarantee in any way that each of those loans meets those standards, but they seek to, in general, have high standards for the lending programs.
Well, thank you for your work on that, and obviously we want to continue to engage Treasury on that to make sure that hardworking taxpayers' investment into global anti-poverty programs actually help people in poverty and don't actually enrich corrupt regimes. Moving on really quickly to the IMF, we've heard from multiple U.S. companies that allege the Angola government has failed to repay obligations owed to them. Also, it's widely reported that the IMF is considering a relief package to help the government of Angola with balance of payment issues. Has Treasury investigated these claims by U.S. companies? And if substantiated, how can Treasury work to ensure that U.S. companies and their employees are treated lawfully by the Angolan government, both now and in the future?
Thank you, sir. So I'm informed that Treasury has been looking into those problems, also that Angola has committed to addressing those problems. It's a new government in Angola, and the previous government was the one involved or alleged involved in these problems. And so as the new government has come in, it's committed and made firm, clear commitments to addressing the concerns made. In addition, then the new government is seeking economic reforms that will further the development. And so I think things are on track with that, and we are watching.
Well, we know, and we have heard also that Angola is making some progress with respect to that, but we would hope that the United States, the Treasury Department, would use its considerable influence at the IMF to make sure that the IMF isn't just bailing out a government that has reneged on commitments to U.S. companies.
I take full note. Thank you.
Yeah, and final question. I don't have much time, but just address international financial institutions in North Korea. We're reading a lot of news reports how North Korea is circumventing the sanctions regime in companies that are beneficiaries of international or multilateral development banks' assistance to them. We want to make sure that MDBs are not actually supporting governments that are not fulfilling commitments to stopping illicit finance to North Korea.
Thank you. So there are two robust UN sanctions efforts, and those are legally binding. In addition, the U.S. has sanctions that are applied to North Korea and to those that would be violating sanctions. So as far as the multilateral development banks, they work through that same kind of system. I'm going to ask if I would be very happy to have questions in that area, and those are ones that we would take very seriously in monitoring the MDBs.
Thank you. My time has expired, and we can maybe explore that a little further in a second round. The chair now recognizes the distinguished ranking member, Congresswoman Gwen Moore, for 5 minutes.
Thank you so much, Mr. Chairman. And again, I want to thank the witness for appearing today. I wasn't quite sure, and maybe I'm seeking some clarification. I heard you say, Mr. Secretary, that there was no intent on the part of the Treasury to increase the IMF quota. That's true?
That's correct.
All right. Well, beyond the question of the IMF quota increase or review, there's roughly $40 billion in U.S. commitment to IMF's new arrangements to borrow, or the emergency backstop that the IMF fund has to be tapped into in the event of a major financial crisis. And that's going to expire in 2022 unless Treasury votes to renew its commitment to the new arrangements to borrow, this emergency backstop, by November of 2021. So given that you aren't going to increase the IMF quota, what is the administration's position on the renewal of the U.S. commitment to the NAB? And that, I'm looking at the charts here, that would be almost $40 billion. But then how do you think other countries will respond? That's $254 billion. If we were to be unresponsive, if we withdrew from that, and of course, if the NAB were to shut down, how would such a reduction undermine its capacity and ability to deal with inevitable future crises? So thank you for being patient and listening to my question.
Thank you. Thank you, Ms. Moore. That's a very good question. And so with regard to the quota, as my testimony suggests, we the U.S., would be opposed to changing the quota. That's the basic capital of the International Monetary Fund. As Mr. Barr mentioned in his opening, that quota has doubled in recent years, and it has substantial forward leaning capacity to lend. In addition, the IMF has currently access to the new agreements to borrow, as you were rightly pointing out. And so in my testimony, I make the point that we want to see a properly funded IMF so that it can deal with international crises. So that's the basis of our policy. And then so President Trump will be involved, the interagency process will be involved in an administration point of view on the new agreements to borrow. And then Congress would also, we would be consulting with Congress. We will shortly, in the next few weeks be notifying Congress of the entry of a discussion with the IMF, a negotiation with the IMF. That's pursuant by law. When the IMF asks for a negotiation, then we consult with Congress and notify Congress of that process. So that's at the beginning now, going forward into 2019, of a process of consultation, which will get into the question that you mentioned. So we don't have an administration policy on that, and we haven't yet been in the process of consulting with Congress.
So, I mean, there's some severability, you're saying, between not agreeing to increase the quota and participating in the NAB. I mean, would you agree with me that it'd kind of be catastrophic for us to shut down the NAB, or to incentivize the other countries to withdraw their $250 billion?
So the IMF faces if nothing is done, as you pointed out, the NAB expires, and the IMF's resources would go down from their current levels.
So you don't intend to do that? I just want to get you on the record saying that.
We're currently in the process of reviewing the resources of the IMF and the potential needs for those resources. We've had conversations. I just last week, met with the managing director, Christine Lagarde, to discuss those needs. And so that process will be going on in 2019, just as you described it, Matt.
Well, thank you so much,
Yes.
and my time has expired.
Gentlelady's time has expired. Chair now recognizes the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chairman, and Mr. Malpass, good to see you again.
Nice
Let's keep on this theme of the IMF and what the ranking member was talking about. As you will recall, this committee and I, back when I had the pleasure of chairing this a term ago, and since then have been highly critical of some of the funds handling of the Greek debt crisis, including their collaboration, the IMF's collaboration with the Eurozone Rescue Organization, the European Stability Mechanism. I continue to be concerned that the IMF's policy regarding co-financing with such organizations do not clearly safeguard the IMF's seniority and independence, and I think that was really one of the pinch points as we were looking at that at the Greek situation. So, you know, why should Congress consider additional funding with the IMF when it seems that the rules of the road really are not clear and it's uncertain what in the world where the Europeans, Chinese, the Russians really are, and as they've had set up their own bailout organizations. So if you could address that.
Thank you, Mr. Huizinga. We're in a situation right now where the IMF's current resources are enlarged because, in part because of the European crisis that occurred in 2010 and 2011. And so one of the issues that, and this will be a matter for discussion in 2019, is how large do the resources need to be now that Europe has set up the ESM that you mentioned, the European Stability Mechanism, and also there's not an imminent crisis for a European country. And further, I should mention, Europe itself has said that it would not, it is not planning to draw on the IMF in the event of a further crisis. They want to meet it with their own resources.
It's never a crisis until it is.
Until it occurs.
Right? And that's really, I think, one of the questions. I'd like to see more clearly defined rules of the road, and that that's going on. While we're on the IMF, and I don't mean to beat them up too much here, but we actually do have an oversight function here in Congress, and I know there was a bipartisan bill sponsored by the ranking member and Mr. Pierce from this committee, which had passed the House by voice vote, that would require Treasury to advocate for the IMF to use its administrative budget for technical assistance that fights money laundering and terrorist financing. This is the way that other IMF technical funding assistance is financed, and they seem reticent on that, yet at the same time, it's my understanding that the fund pays for things like 75% of the education costs of its staff children. Private school tuitions in this area are much higher than they are in West Michigan, I can tell you that. But the IMF also provides something called a house hunting assistance for its staff and preschool consultant. I mean, so I think there are some legitimate questions about the internal use of those dollars, don't you?
Yes, absolutely. And I mentioned in my written testimony one part of the review that the IMF is now doing, and that our inquiries are very focused on the issues that you mentioned there. The entirety of the compensation package, which is incredibly generous from the IMF. You know, it has the added difficulty that if a person is working from a foreign country at the IMF, it becomes a magnet to keep the person here rather than being in their country where they might be even more effective in trying to help that country grow. These are
great
good
point.
issues.
And you know, my no offense to those using the preschool consultant function there, but it seems to me that dealing with money laundering, AML, and terrorist financing is more important. Real quickly on the World Bank, again, the ranking member and I had worked back a couple of terms ago about sexual abuse situations in Uganda, something that happened in the Congo as well, and that there had been some of those folks who had been identified involved with that. There was at least one staff member who appeared to receive a promotion after the sexual abuse of project beneficiaries in Uganda. And how is it possible that that can happen, and what is the administration doing to make sure to pressure the World Bank to make sure that doesn't happen in the future?
Yes, sir. Well, those are deeply concerning issues, and we've been frustrated at times with the World Bank's response on those. So we can raise those in the board, and I'm happy to, or I would like to hear the incidences that you're aware of. We are aware of some, and we work to make the bank address those properly. There's also work in terms of oversight committees within the bank and the IFC, and we work to make those more effective within the governance process and structure of the World Bank.
Maybe with the indulgence of the chair, we could resubmit that letter to the record and certainly get that to you on this joint letter from the ranking member and myself.
I'm reminded of a key word: accountability. So we try to enforce that strongly, and it's often a little bit out of people's grasp. The institution has become very big. And I'd be happy to review the material that you're mentioning.
And Chairman Huizenga would be happy to resubmit that as well to the Treasury Department. Chair now recognizes the gentleman from California, Mr. Vargas.
Thank you very much, Mr. Chair, and I'm very happy to hear that my friends on the other side want to emphasize the oversight function of Congress. I think that we will emphasize that soon. So I'm very happy to hear that. I do want to focus our attention and your attention. Again, great to see you again, Secretary. Thank you for being here. I'd like to focus your attention on North American Development Bank, the NAD Bank, specifically the increase to the general capital, the general capital increase. The administration has requested a $10 million increase, which is a 95% cut, actually, from the contribution to which the U.S. had pledged in the general capital increase agreement reached between the United States and the Mexican government several years ago. As you know, the NAD Bank is a multilateral development bank created to finance environmental infrastructure along both sides of the United States border. And I'd like to make you aware, I think you may already know, that today in San Diego we have millions of gallons of raw sewage crossing the border. Those of us that are San Diegans are very proud of our city and especially of our beaches. And unfortunately, many of the beaches in the southern part of the city are not usable today because of this contamination. And so I'd like to hear from you if there's going to be an increase, if the administration is going to come back for ask for an increase for reauthorization or for authorization, because there is a problem here that the federal government has a responsibility to help with, especially in this crisis that we have along the border.
Thank you, Mr. Vargas.
Thank you.
Yes, we are supporting the authorization of the $10 million that you mentioned. As I understand it, the appropriation has already occurred, and so the administration supports that authorization, and we're hopeful that that could be done either at the end of this year or into next year. That then fulfills the first round of our, that fulfills one round of our commitment. Mexico has already made that contribution, and so we've been encouraged by the partnership that's going on within NAD Bank. There's a very strong executive director, and so I think we are in a position to have that organization be effective in addressing some of the points that you make. And then my testimony points out that looking forward, we will be working to try to find ways that the organization will find more projects that are useful and beneficial across the border.
Well, I can find you a lot of good projects there along the border in San Diego. Of course,
yes.
Not the least of which is this massive spill of sewage that continues. My question, though, to you is whether the administration is planning to request additional authorization of funds going forward. That's my question, not the $10 million. And again, I appreciate that very much, and I thank the administration for that. But there's a desperate need in San Diego for these funds and for these infrastructure projects because of the horrible contamination that's happening. So it's not that the project's not there. The project's there. The funding's not there.
Thank you, sir. So my written testimony addresses this on page 14, and then the Secretary Mnuchin and his Mexican counterpart, Secretary Anaya, Gonzalez Anaya, who the outgoing finance minister of Hacienda, announced a month ago their joint effort of our two countries to expand NAD Bank, and so you're right that there are lots of projects, and so we look forward to working with Congress on that institution and those and the vision for it. My view is there is good staff in place, and it's a good, strong joint effort, and so that gives the platform or the basis for more work on the projects you mentioned.
Well, thank you, and I appreciate those words. I do, however, want to continue to follow up on this and to push you a little bit on this because it is a crisis in San Diego, and it seems to be getting worse. The infrastructure in Tijuana fails more and more. We've had these odd rainstorms, too, that we're not used to, and it's caused tremendous problems along the border.
We'll look into that, too. Thank you.
Thank you very much. Thank you, Mr. Chair. My time's expired.
Gentleman's time has expired. The chair now recognizes the gentleman from Arkansas, Mr. Hill.
Thank the chairman and ranking member for the hearing. It's always good to see Undersecretary Malpass before the committee. Thank you for doing that.
Thank you, sir.
I enjoyed your testimony very much, and one thing that got me thinking is in the first 2 years of the administration, has Treasury led an effort to review sort of all development assistance, working with the State Department? So AID, multilateral, all the contributions that we make, and make sure it's consistent with administration policy.
Yes, sir. So there is an ongoing administration effort to review those in the context of both foreign aid and development assistance. And not mentioned, so we also work with the National Security Council and the National Economic Council on those issues. So it's state, AID, Treasury, those two, and also other parts of the administration, because as we look at how they work, it actually ends up involving the Commerce Department, which helps us seek benefits, direct benefits for American businesses, for example. So there is a pretty robust interagency effort that's in fact, there have been cabinet-level meetings on the point that you raised.
Well, in the conversation today that we have on bipartisan support for avoiding corruption through the multilateral agencies, I thought one of the most significant contributions of the Bush 43 administration was creating the Millennium Challenge, Millennium Corp approach, and I wondered if, in your review, if the Trump administration was following up on that effort to really reward countries that have low corruption in terms of that effort on a bilateral basis.
Yeah, the MCC board just met yesterday, and so it does seek to carry out the mission that you described, to reward or involve countries or governments which are moving forward in a non-corrupt way. And so what it does is reviews applications by various countries, and then is able to make largely grant assistance or fully grant assistance to those countries, some of which are pretty large grants. So it's almost like it's a extended review process that can last multiple years as the country achieves standards. And so we think it's working as intended. It frankly doesn't have that much funding. It's so large. It's not all that large. And so its impact is to some extent limited because of that.
Tell me what the G7's doing and what the U.S. is doing on One Belt, One Road. What coordinated efforts being taken there? I was in the Congo last year and I saw seas of Chinese concrete, but roads to nowhere, universities built on hillsides that aren't even occupied. I mean, obviously trading all that concrete construction for oil and gas from that small country. But there's no real infrastructure development. I mean, there's no increase in productivity or development or educational attainment because of those investments. And the country seems to me to be worse off because of it. What is the G7 doing with American leadership on that?
Yeah, these are huge problems. So part of it has been over the last 2 years, sensitizing and having a shared discussion with other G7 countries that with China as a non-market economy, what's our interface with China? How are we going to deal with this where countries are all doing business around the world, and yet the second biggest country in the world is not using the same principles? And so that is discussed, and it's actually discussed also in the G20, which includes China itself. Right. So it's interesting to have a discussion like this with China right there. And China often recognizes that it does have things that it needs to change in this regard as well. So one thing is to have a meeting of the minds of countries around the world, that there is a big challenge when the world's second biggest economy is non-market. So, and then, as a practical matter, how do we get them to come toward the world in a number of standards areas? One of those is the OECD has an anti-bribery standard, so I'll mention that one. We would like China to be engaged in that. Another kind of example, you mentioned Congo. This is a big problem. China's lent a lot of money with non-transparent terms, so that sometimes the country itself doesn't know what the terms of the loan are, or who signed the loan, what the commitments were that were made, and whether there was corruption underneath it. And so we're working specifically on Congo-Brazzaville, the Congo-Brazzaville, to reduce its debt, but it turns out most of its debt is to China, and China won't disclose or has not been willing to fully disclose what that debt is. And so those discussions take place both in the Paris Club, and also there's a separate discussion that I mentioned in my testimony, the Export Credit Agency discussion under it's called the International Working Group. But they sit around in a room and pressure China to disclose debt. And we're at the point where, in fact, there's a Paris Club meeting going this week in Paris, where we will be making clear to China that they can't come to meetings. They're going to be excluded from meetings if they're not participating. So those are some of the initiatives that we've got going.
Thank you. I yield back.
Chair recognizes the gentleman from Washington, Mr. Heck.
Thank you, Mr. Chairman. That was a good exchange as a predicate to the question I want to ask you about, which is the negotiations to end subsidized export credit assistance. I actually read the report, which I was kind of surprised was focused almost entirely on negotiations with the OECD. That's good. Further progress with Western democracies is a good thing. But I think we all know, I think you've acknowledged it here, that the real problem, truly the real problem when it comes to subsidized export financing is China, and perhaps to some degree Russia. I was surprised that in your testimony today you didn't mention China's export credit assistance. I'm glad you're working on the project financing, One Belt, One Road and the like, but what are you doing? What can you do to reduce China's artificially cheap loans that they make that frankly gives China's manufacturers an unfair competitive advantage?
Thank you, Mr. Hecht. I think my written testimony does mention it, and export credit, subsidized export credits by China is a specific and major problem. As far as the export credit report that you're referring to, it's a little complicated, but the OECD already has a regime for export credit agencies of countries that are members of the OECD. China is not a member of the OECD. So what the world has been trying to do is to get China to play by the same rules as the OECD countries. That's an organization for economic...
Excuse me, sir. What does that look like? We're trying to get them to play by the rules.
Yeah.
Make that statement operational for me.
Yes. So they met in Luxembourg about 3 weeks ago. So they sit at a table, and China is on one side, and kind of the rest of the world says to China, you should be joining the rules that we use for other export credit agencies. So,
and if you don't?
This has been a major problem that we then talk within the G7. Yeah, and you're right to say, talk is cheap. How do you get it done? So I agree with you on that. We haven't found a magic solution. I can tell you, Secretary Mnuchin has been thoroughly engaged. Even at the G20, there was a meeting between the heads of President Trump and President Xi, where they talk about our frustration with their system. Of course, they say some things that frustrates them about ours, but a lot of the conversation is that they've grown so fast in a world where they're a non-market economy. So that's where the discussion is, and we take full note of your point that they're not competing on a level play. They've created an unlevel playing field where they're getting the contracts because they subsidize the contracts. And as Mr. Hill was just mentioning, it shows up in bad projects in Africa.
So I guess my point would be job owning is only going to get you so far. One constructive approach going forward would be, however, the administration and the Congress making sure that our non-subsidized export credit authority is made fully operational. If we want to compete then we ought to do as best as we can with our export credit authority, and we're falling way short of that. I saw that the administration's now formally announced that Assistant Secretary Tarbert's nominated to chair the CFTC. I want you to, please, if you see him, share my congratulations. I think he's an outstanding public servant, and I'm frankly going to miss him in that capacity. I don't know if it's possible to wrap up the CFIUS rulemaking before he departs. I hope so, because his expertise is unparalleled and invaluable. But I also want to make sure we get it right, not just get it done. And I want to note for the record that the leadership of this committee sent a letter a couple of months ago to the administration saying the regulations should be written to be as narrow as possible. I disagree, and so do a whole bunch of members on this committee. The legislation was passed and was designed to counter a very real and growing threat to our national security, and making sure we do so successfully is the most important goal of implementing these rules. I wanted to make sure to get that on the record and conveyed to you about the importance of doing that. And on the happy presumption that we're going to have a second round, and seeing that I'm out of time, Mr. Chairman, I yield back.
Thank you, Mr. Hecht, and I will pass that on to Heath, and I take note of your point on the narrowness of the drafting of the new regulations. Those will, as you know, take some time during 2019, and I mentioned in my testimony the high priority we will be putting on that project. We are putting, so we're actually thoroughly engaged in the points that you refer to.
Gentleman's time has expired. Chair recognizes the gentleman from Ohio, Mr. Davidson.
Thank you, Mr. Chairman. Undersecretary Malpass, thank you for your testimony. And frankly, I'd like to thank my colleagues for very thoughtful questions and the dialogue already that's effectively turned this into a question about how do we actually get China to honor their commitments. Frankly, they committed to be a market economy when they joined the World Trade Organization. Words haven't done it. And I think Mr. Hecht's line of questioning was right on. More conference rooms, and at some level, isn't this really what the Trump administration is getting at with the trade negotiations that are underway? Is the world order has been, frankly, snubbed by China, and simply talking them into participating and playing by the rules hasn't worked since we opened the doors and said, welcome, please come into the world economy so long as you commit to play by the rules. And they haven't so far. They've built great wealth for their country, and that's a good thing for the people of China. Frankly, it's benefited lots of the world in ways that have helped us manage inflation. It's helped us grow our own economies in some respects, but it's also caused massive harm. We dealt with that with FIRMA, with the updates to CFIUS, but we're seeing that in the news every day as American companies and companies around the world have their intellectual property stolen by China, monetized by China, and then us left with nothing to do but sit at conference room tables and complain. What are the real threats to the global order? I mean, we're talking about this. Does the global order work? You're in a position to have oversight of this. You see the World Bank and the IMF helping China, giving loans to China, while China is taking cash and giving it to access the resources of Africa. They're the lead benefactor of the resources in Afghanistan. Meanwhile, we continue to fight a war there. So, you know, given this couple years on the job now, what do you see the real structural threats, and how do we navigate it?
Thank you, Mr. Davidson. I fully share your frustration with specifically with China and various of its practices, subsidies, the state-owned banking system that gives below market rate kinds of credits, and the industrial policy itself that they have put forward. And I know President Trump shares that, and that then informs a lot of what we're doing within the administration. So we're working on those points, and it's by no means just conference rooms. And so I'm mildly, I'm optimistic that we will be able to make progress on those. And I will say, President Trump has wanted a different approach from the one that wasn't working before. As far as on threats to the global order, I hope we do change the global order, make it better and make it work better. And that involves, one of the things and you mentioned specifically the World Bank loans to China. They've agreed to sharply wind down those loans. And so that will extend in 2019. That's part of the commitments that they've made, and we'll see how quickly and fully they can complete that task.
I have a question.
Yeah.
As you look at moving from words to deeds, certainly the tariffs that have been placed directly on China, maybe not necessarily the universal tariffs on steel and aluminum, but certainly, you know, they're at the negotiating table, whereas before they were, you know, essentially throwing out vacuous commitments to do things that never end up happening. What do you view as the prospects there? And I think if we don't get results here rather than just tariffs, do you feel, particularly on steel and aluminum, we could narrow down and just apply sanctions so they're targeted only at China's bad actions, or even specific companies, not even the whole country, rather than hitting the whole global steel and aluminum market?
I'm not prepared today to address the steel and aluminum side of your point, but as far as the more general relationship, one of the things that began a year or a year and a half ago was the U.S. making very specific its concerns with the practices that China was doing, and so you know, they're in ways. Their first response to that was to say, well, you haven't told us what your real concerns are, when indeed we have been telling them very clearly what the concerns are and identifying them in lengthy pages and processes and hours of discussions. This problem is a major problem. This problem is a major problem. So China now, I think, is fully aware of the concerns and is now giving clear responses to what they're prepared to do, and that then forms the start of a discussion or a negotiation. I'm optimistic that we can make progress with that.
I'm certainly hopeful that we will, and as they run out the clock, my time has also expired, and I yield, Chairman.
Gentleman yields back his time. The chair recognizes the gentleman from Texas, Mr. Green.
Thank you, Mr. Chairman, and I thank the ranking member as well. Thank the witness for appearing today. I am absolutely, totally, and completely antithetical to predatory lending. I have expressed this as it relates to what we call payday lending. I've expressed this as it relates to the lending practices that took place that caused us to go into the downturn in 2008, when we had these loans that were made such that the lender, the originator, was in a position to reap benefits by forcing people into high interest rate loans with something called the yield spread premium, which we need not go into today. So I'm antithetical to predatory lending. But I do want to ask this. If China is making these loans and they are infrastructure investments in places outside of China, in Africa, which is a continent, but in countries within Africa, and in Asia, Pakistan may be one example. What happens if these countries default on those loans to China when the infrastructure is in place and the benefits have been received? What will China do such that it can continue with its efforts? What will it do?
Thank you, Mr. Green. I think that's very well put. Predatory lending, what do you get afterward? Sometimes they take physical possession of the asset.
Well, if I may just intercede, how do you take physical possession of a road, of the bridge? And in Africa, roads and bridges, things that are of benefit to people, are being constructed. How do you repossess that?
This is somewhat new in international law. So Malaysia is an example of a country which had been receiving the loans, building some of the infrastructure. There was a change of government. They found that the terms of the loans were not favorable and the construction was not favorable. And so they've tried to resist then the payments on those. And this gets into what I was mentioning earlier. China's not a member of the Paris Club, which has been a group of countries that finds a method to reschedule or to reduce a debt. If it was unfairly presented, or if the country is unable to pay it, there's a process that other countries participate in order to lower the debt and allow the country and maybe the new government to go forward.
If I may,
China doesn't participate in that.
I understand. So permit me to ask with different language, if I may. Assuming there is a total default and the country says, I cannot repay this debt, what does China do?
We discussed earlier Congo-Brazzaville, which is a case where the country is unable to pay the amount of debt that China conveyed, and yet China has not accepted the lower payment. And so we are at a point globally in the international financial system where we are pressing hard for China to realize what has happened and to lower the amount of debt. But there's not a full resolution to the point.
What will China do if the debt is not lowered? If they conclude the country receiving the loan says, I really can't pay it and I'm walking away, what will China do?
In one instance, Djibouti, China took physical possession of land as payment for the debt. Another country that's currently having debt difficulties, Gabon, is trying to work out the terms with China. So your point is well taken. Within the international law sphere, though, there is the difficulty of if there's not a bankruptcy process or there's not a debt lowering process, the lender can claim rights, which is what China has been doing, and that's what we're working hard. I mentioned in my statement, Secretary Mnuchin has launched an initiative, a powerful global initiative to force transparency of debt as a starting point in addressing the points that you're raising. Our first step in getting a resolution of this is to get the IMF and the World Bank to work with countries to make sure that they're aware of the debts that they're taking on, and then have a methodology for dealing with those debts, which they often don't have right now.
Thank you for the additional time, Mr. Chairman.
Thank you, sir.
The gentleman's time has expired. Without objection, the gentleman from California, Chairman Royce, is permitted to participate in today's subcommittee hearing. Mr. Royce is a member of the Financial Services Committee, and we appreciate his interest in this topic, and he's recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate this. And, you know, in October, we passed the BUILD Act, which the President signed, and that creates $60 billion in U.S. international development finance, and does it in a way that's rather unique. The African Development Bank can be used in this, equity funds can be used, loans can be made in the currency of the country. So this will mobilize private capital in support of sustainable, broad-based economic growth. It's going to provide countries a firm alternative
to state-directed investments by authoritarian governments like the one in Beijing. But as you know, their $1 trillion One Belt, One Road is basically the equivalent of the Marshall Plan in terms of the capital deployed there. And as you note in your testimony, the problem is that China's model of development finance, which, by the way, I've seen firsthand in many of these countries, looks more like loan sharking with zero concern for debt sustainability. And as a consequence, according to recent reports, 8 countries are at risk of debt distress. As a result, Pakistan is currently seeking a multi-billion-dollar IMF bailout. In July, Secretary Pompeo said there's no rationale for IMF tax dollars and those associated with American dollars that are part of IMF funding, for those to go to bail out Chinese bondholders or China itself. Now, that's the conundrum here. You said in your testimony that we've built a common awareness about China's predatory lending practices at the G7 and G20. But the issue goes beyond that. The question is, can we do more to leverage our influence at the IMF and other international financial institutions to raise the alarm bells? And how should we respond when countries indebted to China seek assistance through that institution that we're part of? We need to think that through.
Thank you, Mr. Royce. Those are all very good points. And with regard to OPIC and the BUILD Act, I talked with Ray Washburn yesterday. We have an OPIC board meeting tomorrow, and we'll be reviewing the establishment and setting up of the new development finance institution. And so I think it offers some tools that can be used. With regard to Pakistan, Secretary Pompeo is exactly right, and so we are working and making clear within the IMF that if it were going to supply any funding to Pakistan, that it would not be used to repay Chinese loans.
Yes, indeed.
And
okay.
So I'll make one other point on that. We are trying also to make sure that Pakistan changes its economic program so that it's not a failure in the future. So that's the core of our purpose with regard to Pakistan.
Okay, and the administration has frequently accused China, as we are, of flouting international norms and obligations, including theft of intellectual property and forced technology transfers, industrial espionage. Is a framework agreement between the U.S. and China a first step towards a legally binding trade agreement consistent with TPA? And if not, why is it that that's the preferred approach?
I beg your pardon, sir.
To seek a deal outside of the TPA, because a legally binding trade agreement negotiated under the Trade Promotion Authority, such as the recently concluded U.S.-Mexico-Canada agreement, or the upcoming negotiations with Japan, the EU, and Great Britain, could provide the U.S. with stronger legal tools to hold China accountable when it misbehaves. We're aiming for an executive trade agreement here. I wanted your view on that.
I'll give you my personal view, and
yes,
this is something
personal view
that
is great.
Others in the administration would have more important views on this. But the problem with China is not near a status where it can consider, or where we could consider working toward an agreement with them. Their practices are very different from market practices. When we look for countries or possible candidates to enter into a bilateral free trade agreement, that would be more on the order of the UK, where we are seeking a bilateral agreement, or with Japan, where our systems are compatible. With China, there's so many steps that China needs to go through in order to have a system that we could even interact with in that way. But what I do think we want to do with China is find ways that we over the next, and the President has set a deadline of 90 days, to find ways that they can make major steps forward in terms of their systems and their structural processes create a more level or a less unlevel playing field with the U.S.
Thank you, David. Thank you, Chairman.
Gentleman yields back. Chair now recognizes the gentleman from Indiana, Mr. Hollingsworth.
Well, good morning. I really appreciate you being here, and I've certainly followed your testimony today as well as previously in talking about this. I wanted to take maybe a giant leap backwards, perhaps, and talk a little bit about the global architecture and how I go home and what I'm telling the great Hoosiers of Indiana's 9th District, what we're trying to accomplish. So we talked about this huge alphabet soup of a lot of different institutions with a lot of different missions, a lot of different corporations with a lot of goals that they have set for themselves. The United States spends a lot of money on this. The United States spends a lot of time on each of these. What are we trying to accomplish? What's the mission in our involvement across the entire platform? What am I telling Hoosiers back home that this is what we're trying to accomplish?
Yes, sir. Originally, the purpose was of the World Bank. It was created in 1944 and was trying to rebuild Europe after World War II.
Right, but today,
the mission spread out to fighting poverty,
Yep.
To helping countries that are a little bit higher on the income scale develop better government systems,
Yep.
and also their private sector involvement of various parts of this family of institutions.
Right.
But your point is very good of how do I take that home to my taxpayers? Right. We're trying very hard to get reforms. So a starting point for this is that the institutions have gotten used to getting new capital all the time,
right.
and then they spend that money. We want to create a sustainable lending limit for each one so that they don't just keep growing. So that's a starting point for how we can bring discipline.
Totally agree.
Yeah.
And very thoughtful. So what I heard you kind of elucidate were 3 different points, right? The reduction of poverty around the world, right? Ensuring that slightly higher income countries develop thoughtful practices, maybe sometimes during crisis, post-crisis, but hopefully pre-crisis, about their budgets, fiscal, monetary policies, right? And then third, helping to integrate across border private corporations' activities, right?
Yes.
How do we know when we've been successful? What are the metrics that we're using, right? I go home, I sell Hoosiers on this very great mission that we've got around the world. I want to be able to go back to them and say, this is how we know we've achieved success in the U.S.'s involvement around the world.
Two ways.
Okay.
One is that the country itself would record higher median income, not just GDP,
Got it.
but the actual
median
income of the middle person.
Population growth.
And
yeah. Okay.
the reason that's good is that makes them more stable and they can buy more things from the U.S. So another way to think about it is that people will have a better diet.
Right.
They will have more access to technology,
Yeah.
things that American companies sell.
Okay, so higher median income per country is one thing that we look at. And then is there a second, or is that the metric?
The second is then that they actually interact with the U.S. in a way that's commercially helpful to us.
Got it. So am I going back to sell them on this benefits them indirectly, a better partner around the world, whatever that country may be, benefits U.S. consumers, U.S. producers, U.S. companies, U.S. workers, the U.S. economy, and the U.S. government ultimately?
Yeah, I think so. I think it's in our national interest to see other countries have higher median income because then they are...
Have we been accomplishing that mission? Do you feel over the last 10 years, have we been accomplishing that mission?
In my opinion, no. I've been somewhat a critic of the world order. So if we look at the IMF statistics on growth, they slowed way down after, part of it was the 2008 crisis, part of it was the 2010 Eurozone crisis, but then even after that, there was a remarkably weak recovery, and I think that,
Totally agree. So some of the reason for that is exogenous, right? Stuff happens, business cycles go up and down, but some of that is a little bit endogenous to some of the institutions themselves, and I think we've talked a little bit about that. And that's what really concerns us most, because that's what we have control over, right? We have a lot less control over everything in the world, but a lot more control over how the institutions and what their mission is and how they're delivering that mission. And I think that one of the challenges I consistently have going back home is talking about how important this mission is, not just for raising median income around the world, because that is a laudable goal, but how important that is for U.S. national interests, right? And for the U.S. taxpayers' interests and for American interests. And I totally agree with what you said, right? Better partners around the world mean a more stable world, which benefits U.S. taxpayers, which benefits America, right? A higher median level of income means more opportunities for U.S. companies, more opportunities for U.S. workers, right? But also more opportunities for those foreign companies and the great technologies that they may be developing, thinking about, and entrepreneurs to be able to sell their products here in the United States. And I think that's a mission that I want us to sell, and that's something that I want us to talk about, but I think we can't talk about it hiding behind, this huge number of acronyms, right? And it's really hard for somebody at home to think about, well, the World Bank does this, right? The IMF does this, the MDC does this, and all of these different, they want to know what the overall mission is, and they want to know how that mission impacts them because they're footing some of the bill, not only in terms of the treasure that they send abroad for this, right? But also in terms of the time that their government devotes to this when it could be devoting to other issues. And so I know that that's something you're passionate about. I know I've read it in your literature before. I'm passionate about it as well. If we are going to have a commitment to this, I want to know why, and want to know how we're measuring progress on that. I know the chairman's asking for the time back, so I'll yield back the rest of my time.
May I respond? I'll try to be very brief. So one way we can do that is make the organizations work better, more efficiently, and I've addressed that some. And then we talked today a little bit about our frustration with Pakistan, which has had lots of programs and yet not a good economy. And so we're working to try to fix that there. And then I'll give you one on the less negative side. In Ethiopia, a new government has come in, and so thankfully there is a lot of money available from these organizations to support a country that's actually trying to transform itself. And so I'll single that one out. A lot of people that have been held down for decades that are beginning to come out of that. And so IDA, the International Development Agency, just gave a $1.2 billion loan to Ethiopia that will help it set up healthcare systems and other parts of its government that will begin to function. And so, people at home can say, this is, why am I doing this? So we have the good and the bad of it. And in a lot of cases, it's not the U.S. choice. These are legacy institutions that came after World War II that simply exist. And what we're trying to do is make them function as effectively as possible. Thank you, Mr. Chair.
Sure. The gentleman's time has expired, and the chair now recognizes the gentleman from California, Mr. Sherman.
The World Bank last lent money to Iran in 2005. Prior to that loan, one of your predecessors testified that we had an absolute veto of what the World Bank would do. Turns out we don't. Are you aware of any proposals at the World Bank to make additional loans to Iran?
Thank you, Mr. Sherman. No, I'm not aware of any.
What would be the U.S. response if it was raised?
We would strongly oppose that, but I'm not aware of any of those going on.
Last time we opposed it, but that's all we did. We voted no. Would it cause the administration, would it affect the administration's decisions as to whether to make additional investments in the World Bank if we were to get outvoted and see, in effect, our money mixed with others be sent to Tehran?
If it occurred on an Iran issue, I expect it would affect the administration's thinking on the institution. Turning to your broader point, though, and it's an important one, we don't have a veto, and so we, the U.S., are frequently outvoted in the multilateral development banks, meaning the U.S. opposes or abstains on a vote, and the loan goes forward despite our opposition.
Turkey has been a serial IMF borrower, 19 previous programs. The lira is down by 30%, so they may be seeking IMF financial assistance. Erdogan is being portrayed as a friend of the press because he's opposed to when Saudi Arabia murders journalists He himself, of course, has incarcerated more journalists than any leader in the world, save, I believe, one. Will the United States support an assistance package for Turkey at the IMF?
I'm not aware of any request from Turkey with regard to IMF assistance. So in contrast with Pakistan, which has asked for IMF assistance and we're trying to analyze that, Turkey hasn't, to my knowledge. And I don't know, well, I would imagine there would be strong U.S. concern about that process, but that's not before us right now.
What is before us, as you point out, is Pakistan. Looks like the IMF will loan the money to Islamabad so they can send the money to Beijing. What do we do to make sure that the IMF isn't used, in effect, just to pay back China?
So we will make strong efforts, and I believe successful efforts, to make sure that what you described doesn't happen, meaning a payoff of Beijing via Islamabad. But Pakistan has not been successful yet at all in finalizing a package with the IMF. So it's something that we follow closely, but as I mentioned earlier...
I hope you would focus on the fact that money is fungible, and for the IMF to make a loan to Pakistan, unless Pakistan agrees not to use any money to repay China, means that, in effect, IMF money is repaying China.
Yes, sir. And one of the things that we are aware of and do follow is the IMF loans tend to be shorter maturity loans, and China's loans to Pakistan have been longer maturity loans. So from the standpoint of the money, of that money being used, we will look for ways that round tripping does not happen the way you described. But important in this, in my view also, is the structural reforms in Pakistan that are necessary for it to stop being such a poor country.
And will the United States be in a position as to the 15th General Quota Review, that is to say, to make additional investments in the IMF?
We discussed earlier today that we will oppose a change in quotas, and then with Ms. Moore, we discussed a little bit, to her good questioning, the issue of the new agreements new arrangements to borrow, which expires in 2021, and so. What we are seeking to do right now, our process is to understand the needs of the IMF in reasonable terms. What are their current resources? What do they need? And how can those best be met?
Thank you.
Yes.
Secretary Malpass, there's an interest in a second round of questioning, so we'll begin by recognizing me for another 5 minutes. Since we're on the topic of China, I want to turn to the World Bank and China, and World Bank shareholders recently pledged $13 billion of additional paid-in capital in order to expand assistance to middle-income countries, the IBRD. As you know, the bank committed $2.5 billion to China in 2017 and has committed nearly $2 billion this year, despite China being the world's second-largest economy. Why should the bank be providing assistance to a country which has $3 trillion in reserves and which has enough resources and know-how to establish its own development institutions?
They shouldn't be, and so we expect the IBRD to develop new country programs for China that will wind down its lending to China.
Thank you, and continue, please. We encourage you to continue to put that pressure in that place. And it was interesting to read this morning the headline that China prepares a policy to increase access for foreign companies as a result of the negotiations that were recently concluded, I believe, in Argentina. the kind of preliminary framework of negotiations that were agreed to. What we are reading this morning is that China plans to replace its industrial policy, its so-called Made in China 2025 policy. There's a lot of skepticism about China following through on its subsidies to state-owned enterprises policies. What are you, Secretary Mnuchin, and Ambassador Lighthizer doing in these negotiations to make sure that, in fact, China does abandon that policy? And also, while you're addressing that question, how are you going to address the issue of cyber espionage in those negotiations? We hope to see this $1.2 billion purchase of new exports from the United States that they have supposedly committed to, but I'm really interested in these structural commitments that they've made in terms of subsidies to state-owned enterprises and the cyber espionage issue.
Yes, we're hoping for 1.2 trillion of
sorry.
As far as how this is worked out, I don't want to go into the output of a negotiation, but what I'm pleased of today is to see discussion and on the table the 2025 program, where China had been suggesting to the world that it deserved or could take those sectors by storm with subsidized financing state-owned enterprises as you're describing. And so having China find its way to a more market-oriented stance for the world is a critical purpose of the negotiation. So how that commitment, one way is, and President Trump, you know, is a tough negotiator. The proof is in the pudding. Show me what you are doing now. And so that will be part of this. There'll also be, and Ambassador Lighthizer has been very strong on the issue, and as has Secretary Mnuchin, on enforcement. And so there's a desire within the discussions to have specificity, to have firm timelines and deadlines and enforceable kinds of conditions that allow, and if I may make a general point, this is important to China as well. As we believe, a market economy gives its participants better incomes, better lives, more freedom, and so China seeing that and historically, China has moved somewhat in that direction. They allow more market pricing within their economy. Well, doesn't it follow then that state-owned enterprises are not the best way to be providing goods and services?
Well, we wish you well in your endeavor there. And we appreciate the administration pushing hard on all of those issues. Final question related to China, and my good friend Mr. Heck was instrumental in working with us on CFIUS. He mentioned the letter. Since I'm a signatory to that letter, let me reassure my friend that we're not necessarily asking in that letter for a narrow reading, but a faithful implementation of the CFIUS reforms, the FIRMA legislation. Mr. Heck was instrumental in working through some of the details and negotiating the details there. We're not asking for necessarily a narrow implementation, and I would move for entry into the record the letter so that you can re-review that letter and what we're asking there. Not necessarily a narrow reading, but striking the right balance between strengthening national security, faithfully implementing the statutory changes we made to CFIUS, while at the same time keeping an open investment environment, particularly when it comes to the focus of the reforms. Focus of the reforms should be on China, should be on Russia, should be on adversarial countries, but we want to focus the resources of CFIUS on those countries or governments that pose the greatest national security risk, not as much on friendly trading partners that do not pose a risk in terms of malign investment, but rather are a beneficial trading partner and provide us with very benign job-producing foreign direct investment. We want to keep that open investment environment in place, and that was the spirit of the letter. So I just wanted to add that to the record. And again, we've worked really well together on this, but take a look at that letter, and I'm sure members on this committee will continue to engage on that.
Thank you very much, sir. I'll take full note.
Okay, thank you. And my time has expired. Chair recognizes the ranking member for another 5 minutes.
And thank you again. This has been a very informative hearing, and I just want to continue on. And just for the purposes of a little background information, I want to talk about the complaints that civil society had made about the operation of the World Bank during the 1980s and 90s. They were under attack, and rightfully so, from civil society and some key donor governments in the United States, in Europe, in Japan, about their projects that were detrimental to the environment, hurt the poor, and did more harm than good. One glaring example was the project that they were doing on the Narmada River in India, lined with sacred temples and shrines, and they were planning to build more than 3,000 dams, the World Bank was, and it would have forced the evictions of hundreds of thousands of people. Fast forward in 1994, finally, the civil society groups and those countries were able to get a vehicle called the inspection panels put in place as an accountability mechanism that would allow ordinary citizens, those NGOs and those in civil society who felt disadvantaged by the bank projects, to submit their complaints and see them addressed. And the World Bank became the standard bearer for democratic accountability at the multilateral development institutions. Now, recently the World Bank completed a review of the inspection panel with the goal of updating its operations and increasing its effectiveness. And from what we currently understand, the review ended, unfortunately, without a consensus on the three most important reform proposals, including giving the inspection panel a dispute resolution process, 2, extending the time frame for eligibility of complaints, and more importantly, giving the panel the authority to monitor bank management's implementation of corrective actions in instances which have been found to have violated the bank's own policies and standards. Now, I've been told by those closely associated with this process that the failure to reach this consensus is just, it is, exhibit 1 of lack of leadership. That without a major bank shareholder like the United States backing these reform proposals in a serious, committed way, they're allowed to languish without resolution. So my question to you, Mr. Secretary, is what is the U.S. position on the question of giving the panel authority to monitor the implementation of action plans that are aimed at bringing bank management into compliance with the bank's own standards and policies, and the board giving itself several more months, extending that period to decide these 3 outstanding issues? What plan do you have in the coming months to shore up support, including from the Europeans, to break the deadlock on these reforms, particularly with respect to the panel's monitoring function, the lack of which has been identified as a key weakness in the panel? And thank you for enduring my question. This is important to me.
It's a very important point. Thank you, Ms. Moore. So we share very much your interest in the independence of the inspection panel, the accountability, the monitoring that functions. We share your frustration that they were not able to reach agreement on that. We, the United States, strongly supported the points that you made as far as how the reforms should be done. So we are supporting the idea of a continuation into next year, and so they can try again. As far as how we can get the Europeans and the others to join us in that. That sometimes is a hard task. The bank operates in its own ways and sometimes doesn't have strong enough leadership on this. So we've been frustrated by
With your indulgence, Mr.
Yes.
Chairman, just let me redirect this question. Okay, so we're a major bank shareholder. I mean, we got, you know, it's like having having all four of the aces or three of the four aces in our hand. And so when you say they, I'm talking about the United States position, you know, more specifically on sort of giving us more time to decide these outstanding issues. The bank did give itself. So I just want to know, are there concrete plans for you to do it versus just saying, oh, it's just a shame we didn't get there? I mean, I want the U.S. to step up and take the role that a major shareholder ought to take. Is that the position of of the U.S. Treasury, that we're in the catbird seat and that we ought to be providing this leadership? It's a leadership problem.
We have 16% of the shares. We are frequently outvoted within the organization. Currently, and in my testimony, I expressed frustration with the management of the World Bank with regard to its China relationship, including its comments on China's infrastructure projects. So I would say we're not in the catbird seat in that at times the bank won't do what we think is the right direction to go, and in particular, at times the bank management will not go in the direction that we think is in the interest of the institution and its both its donors or its shareholders and its borrowers. And this is one of those.
Well, you know, the history of the World Bank and not having these inspection panels demonstrates that it'll be costly if we don't intervene. And so I know that this administration is concerned about that. You know, we have a lot at stake being the major shareholder here. And so it will cost more if we allow the bank to slide back into not doing this. And I hope you agree with that.
Your point is good, and we will make that to bank management, and we share your frustration on that point.
Thank you so much, and thank you, Mr. Chairman, for your indulgence.
Good question. Thank you very much. Chair recognizes the gentleman from Arkansas for another round.
Thank you, Chairman. I also, Mr. Malpass, want to compliment your section of your testimony on the troika of tyranny. As a longtime supporter of the Monroe Doctrine, I appreciated that comment on your part. What on the economic sanctions, are we getting economic sanctions support from the Congress along with the Treasury to deal with our Central American problem and the challenges presented by the governments of Central America, Venezuela, and Cuba? Are you getting what you need from the Congress on that for economic sanction purposes?
Thank you. With regard to Nicaragua, so we have designated individuals that are corrupt or that are conducting malfeasance within that, and so we have not felt that we didn't ask Congress for extra authority. I do take note that that a new bill, the NICA bill, has been moving forward that directs our efforts within the multilateral development banks, which we agree with and have already underway. With regard to Venezuela, we put in an array of sanctions. So one of them was to prevent PDVSA from paying, Citco from paying dividends to PDVSA. That cut off some of the flow of money to the Maduro regime. And the logic behind this is as the money gets to Maduro, it goes into himself and his cronies and does not benefit the people of Venezuela. So it takes away from the heritage of Venezuela for that money to flow. So we were able to stop that and also stop the trading of Venezuelan debt by Americans in secondary markets, which has undercut their ability to borrow money and the regime to take away the wealth of Venezuela from the people. So we're trying to preserve the assets of Venezuela for the people in the hope that they will have a democratic future. And we've also done designations in Venezuela, and most recently sanctions that affect the gold sector and other sectors of the Venezuelan economy where there's a corrupt enterprise or there's an enterprise that's conducting itself harmfully to the people of Venezuela. And with regard to Cuba, there's a separate set of activities underway. And in all three cases, our goal is to have democracy available to the people of those countries. And we see the effect in Venezuela of the lack of democracy in terms of people suffering huge malnutrition and high inflation, violence, and being subjugated by gangs and then they have to flee. I mentioned in my testimony 50,000 people per day crossing the border into Colombia to get out of the bad situation that Maduro has created.
Thank you. Let me shift gears and talk about our work in the EU and the UK on the covered agreement for insurance purposes. And as you know, I think the Treasury agreed to have a policy statement included in the EU arrangement, but it was determined too late, so it was not included. But in working with the UK, it could have been included with the United Kingdom, and I'm surprised it wasn't. So tell me about Treasury's negotiating purposes with the United Kingdom for the covered agreement, and why was that not included subsequent to the bigger issue?
I'm told there was a policy statement that was separate with regard to the EU, but with regard to the UK agreement that we have just yesterday.
Yeah, why was it not included in the UK agreement since it was too late to have included it
in the EU?
Yeah, in the EU.
Yeah.
Because it could have, you had time since you just concluded the UK work to put that language in the UK-US arrangement. And I'm just curious why it wasn't included.
We are going to do that in the U.S.-UK agreement, which is now coming to Congress, which is a technical extension, or it's a Brexit-related issue. It will be, the policy statement will be included in the agreement. Okay, I'm corrected here. It will be, the policy statement will be separate as it was in the EU with the EU agreement. And so I'm sorry, Mr. Hill.
Shouldn't it be included? I mean, my point is, shouldn't it be, why is it not a part of the agreement? And if you can respond in writing to me, but I mean, if we're going to have an agreement, then I don't think it should be a side agreement, particularly when we had the opportunity to include it in our UK discussions. And Mr. Chairman, I'll yield back. Please, if you would, respond to me in writing.
We will in writing. Thank you.
Gentleman yields back. Chair recognizes the gentleman from Washington.
Thank you, Mr. Chairman. And I want to use this opportunity, since the good gentleman from Arkansas, as he so often does, anticipated my question almost precisely, to only follow up and make sure I understand. You are saying that it will be included in a policy statement.
There will be a policy statement, but it will be separate from the agreement, so it will follow the same pattern as the EU agreement, which was in parallel with a policy statement.
Including the same kind of language, if not the same language, reiterating the importance of state-based regulation.
Yes, and that's been we have been privileged to work with Congress on this and and we are taking active steps to be engaged with the state-based insurance regulatory structure, and that's a key part of what we're doing.
Actually, I'm glad you said that, because I'd also like to take the opportunity to compliment you on that. I frankly think the way in which you approached that vis-a-vis state-based regulation and some of the insurance commissioners was far better than under the previous administration, and I want to acknowledge it and I want to express.
Would the gentleman from Washington yield for just a moment?
Sure.
Just for a second, I just want to add my compliments to that work. And the reason why I'm optimistic about Brexit is I believe the Anglo-American view of functional regulation is far superior to the EU. And I think it'll be something that we will have post-March of next year an opportunity to once again lead a more common sense regulatory environment, including state regulation of insurance. And I thank the gentleman for yielding.
You're more than welcome. Also, while I still have a little bit of time, I do want to acknowledge and express my appreciation to the chair for his clarifying the intent behind the letter vis-a-vis CFIUS regulations. I remain concerned about where all this goes and reiterate my concerns in that regard to you. But I'll tell you what I've never been concerned about. I've never been concerned for 1 minute, let alone 1 second, about that which I've expressed to you privately and also on other occasions publicly. I've never been concerned about the constructive and good faith way in which you approach these negotiations over several months. And as a matter of fact, would suggest, frankly, that the many, many months it took us to have a modernization of CFIUS, which yielded a result, was frankly an outstanding example of where bipartisanship can work, and was unheralded, frankly. And I'm not sure why, because that was not a little bill, that was a pretty good sized bill, and it came through a lot of hard work on the part of members of both political parties, most notably yourself, Mr. Chairman, and I thank you for that. I yield back the balance of my time.
Thank you, Mr. Heckton. We share that warm feeling. I mentioned in my testimony bipartisan on that, and it took work from you folks, and also Heath Harbert. Thank you for mentioning him. And you know, Secretary Mnuchin worked hard. So one of the lessons I think we can learn is people can tackle a really hard topic and try to come up with a good solution, but it's going to take, it took a lot of hours. Thank you.
Cannot exaggerate the importance of the role that Secretary Tarbert played. Cannot.
Thank you for your kind words, and the gentleman yields back. The chair recognizes the gentleman from Ohio.
Thank you, Chairman. Thank you all. I really appreciated your testimony and the chance to have a second round of questions. You know, we talked earlier about the impact of the sanctions that the U.S. has in place. I might delve briefly into OFAC, but I'm curious, when you look at the broad international order that's out there, and you go to the purpose of entities like the IMF, it was originally created to preserve the stability that the U.S. helped create post-World War II. And a key component of that has certainly emerged as the petrodollar. I'm curious, in your estimation, how critical is the petrodollar to the stable balance of payments, and how significant is the stable balance of payments to America's ability to continue our fiscal status quo?
Okay. Challenging questions. Thank you. And so one observation I'd make is that the global order has changed a lot over the many decades. So if we think of the global order after World War II, it was one thing, and then it became another thing in the 80s, where Japan played a critical role and still does in the global order. And now we have China, the second biggest economy, and we have a different kind of a global order, and we all have to adjust, and in particular, China needs to adjust, but the system is constantly adjusting to that, and the IMF kind of does, and my testimony goes into some areas where it could do a better job of adjusting. With regard to petrodollars, my own view is that that our strength, our strength as a nation, comes more from our actual output. So as we think about it, the remarkable thing of the U.S. becoming a global exporter of energy, now having been for many, many decades an importer of and dependent on foreign production, now we're a net exporter. And so that's going to end up being our strength going forward. The dollar itself, or you're describing the petrodollar, I think is also a result of our strength in financial services. So the U.S. has allowed innovation, and it was mentioned by Mr. Hill earlier, the importance of our relationship with the U.K. And of regulatory strength so it's rule of law transformed into regulatory policy that defends the system and allows innovation. And so that's going to be our strength. So I'm not as worried about preserving the existing order, but more of creating and flexing with a new order. Right now, world energy markets and financial services the U.S. has a very strong position in that, and we seek to preserve that and extend it.
Certainly do, but as we do have the balance of trade as it is, and the massive amount of borrowing that the United States needs to do, that balance of payments is critical to sustaining the amount of borrowing we do. So I guess the related piece I would add to the question would be to IMF, as IMF continues to try to be relevant. Do IMF efforts to look at synthetic currencies, working with China to add RMB to a basket of currencies, to develop alternative currencies for this trading system, pose a threat to the U.S. balance of payments and our current debt burden and the ability to finance it?
All good points. So as far as the IMF and the SDR, the special drawing rights, the IMF had promoted those in earlier years and is doing that less so now. And so the U.S., for example, are not continuing to buy any SDRs. And so we hold a small amount and don't participate in that kind of process. And the IMF has evolved, I think, some in its thinking. The RMB was added to the SDR in previous years at a point where people maybe didn't fully recognize the direction, the non-market direction that China was taking. So whether that same decision would be made today, I don't know. And so we're left with a situation where the dollar remains a vital currency globally, and the deepest markets, with our debt markets being very deep, as Secretary Mnuchin has often been able to say. And so I guess my thought would be, again, that our strength as a nation comes from productivity, from production, and also maybe from finding ways to constrain our government spending, which is always, a big
Let's hope it doesn't entirely depend on that. It's not quite successful there. My time has expired, right. Chairman, I yield.
The gentleman's time has expired, and with the Secretary's indulgence, one final round of questions from me. And before I ask my final set of questions, let me also lend my voice in support of the sentiments expressed by Mr. Hill and Mr. Heck related to the covered agreement and the policy statement. I think that's very important that that policy statement be incorporated in the post-Brexit covered agreement.
Duly noted. Thank you.
Thank you. And then final few questions on the World Bank and IMF. In recent years, the World Bank has explicitly made inclusive growth a priority for its lending to the poorest countries. Inclusive growth is meant to encourage economic opportunity for all, including women, in the bank's projects. The World Bank's Evaluation Department recently issued a report on the effectiveness of these efforts. While the evaluation report noted some progress, it also concluded that, quote, many bank group interventions lacked a clear articulation of the mechanisms through which they would contribute to the well-being of the poor and often excluded Relatedly, the programs and projects results frameworks and data collected during project supervision were often insufficient to clearly establish the bank group's contribution to inclusive growth. In plain English, this means that the World Bank itself doesn't even know how its work may have helped the poor, and it often doesn't collect the necessary data to find out. So, Mr. Malpass, how are these performance failures acceptable? I'm sure you don't think that they're acceptable, but what is Treasury going to be doing to correct them?
Yes, sir. One thing we do is, or that I have tried to do, is get us to put sufficient weight on loan review and also the forward pipeline. So as the World Bank thinks about loans, is it thinking sufficiently about how does that loan improve the conditions for the poor? And if it's not doing that, it's probably not a necessary loan. So we can try to build benefits in from the very start, rather than looking at the quantity of loans. You know, there's a temptation in a big organization just to say, let's puff up our book. So we're working on that. And then another, or a somewhat different point, to oversimplify, I look at median income, and seeing the median income go up. And so rather than maybe collecting lots of different statistics that are costly to collect, one of the benefits that we see is if the median income is going up, you're probably on the right track. And the problem is, and we discussed that a little earlier, for a lot of countries it's been going down. And so I think if we can have an evaluation criteria where countries need to show programs where median income is going up, and the World Bank and the IMF need to be supporting programs that do that, then we'll be on a better track.
Very good reform, and this committee, in this Congress passed unanimously a World Bank Accountability Act that would focus reforms on encouraging beneficiary countries to improve the economic freedom index of those countries. And I know you share that goal, but when you talk about rising median incomes, countries that are making reforms to liberalize their economies and provide greater access to free markets, those are the countries you'll see those rising median incomes. Final question. In a report this spring, the IMF's Independent Evaluation Office suggested that the fund's work in fragile and conflict-affected areas may be hampered by its human resources policies, which led to less experienced staff working in this field. The report concludes that there is, quote, a widespread perception of a stigma attached to such work, a perception substantiated by slower promotion rates. A fundamental change in staff incentives is needed to encourage work on fragile and conflict-affected situations, unquote. So as with the World Bank, this committee is concerned that the toughest jobs at the IMF and other international financial institutions are precisely the ones where staff are not incentivized to tackle. And if these institutions aren't going to take these tough cases seriously, then the request for additional taxpayer dollars ring hollow. Again, what is Treasury doing to compel these institutions to take staff incentives more seriously so that the best and most effective employees are rewarded for taking on the most challenging jobs?
Yes, sir. We will work on that in the IMF review process, and my testimony mentioned some of that. And I share, or I think the point that you're raising is an excellent one. For the institutions, often the fastest promotion path is to be in Washington, D.C. Well, how does that help the countries themselves as far as is that the best use of talented people's time to be in the bureaucracy here in D.C.? With regard to the World Bank, they are doing a review of these human resources. They have a somewhat separate point, which is, it's a related point, that the jobs are good and the compensation is good, and so people stay on year after year. And so if you think about it, one of the things you want in these organizations is younger staff that is very energetic, especially in dealing with, let's say, a fragile and conflict-affected state. These are hard places to work. And so one of the things that's been happening over the years is people stay on. And so one of the goals of the human resources policy would be to make sure that the people that are there really want to be there and want to be energetic in their job. So we're working on that as well.
Right. Thank you for your response. And again, thank you for your testimony today. Without objection, all members will have 5 days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I would ask our witness to please respond as promptly as you're able. This hearing is now adjourned.